short of it is.
Absolutely. How about at the end of the day, do you do anything? Like, I'm really fascinated by rituals and things like that.
So I think it's really important to be ethical and actually paying them well above.
Innovators is that, you know, when you look at a property perspective, it's a future home.
Hi, I'm Owen from Rask Australia. Thanks for tuning in to the Rask Network. Before we get into today's show, there are a few things we have to go over. Firstly, what you're about to hear and see is limited to general information only. It's not personal financial advice like you get from a financial planner. Also, it's important to remember that past performance is not indicative of future performance. That means that anything that's happened in the past, or we say today, is not necessarily going to reflect what happens in the future. Lastly, please consider that any of the guests or myself are featuring on this program may have a financial interest in some of the products or shares mentioned. That's enough from me. I hope you enjoyed today's program. By my calculations, it is 6:06 p.m. So for Rob and anyone in the Selfwealth chat, it looks like if you guessed 6:06 would be the time that I arrive, then here we are. Well done to you. I do apologize that I am a bit late. I wasn't making that many changes to the slides. I was just on a very, very, very important meeting for something that I've been working on behind the scenes at Rask. And I wouldn't normally do that back to back, but I had no choice. So I apologize for my tardiness this evening. But we do have a bit of a fun agenda tonight. And thank you, everyone who tuned in last week for the pre-recorded session with David Dicker. Did get a lot of mixed reviews. So we got some folks that were at one end of the spectrum and some at the other saying, love him, hate him. It's a really interesting chat nonetheless. So I think I'm going to turn off. Can I just get a quick show? If I show this slide, is that in reverse for you? Paul, Deepak, Benny, Colin, Martin, Mike, everyone that's in the chat, Rob. Is this reversed? Is that how you want it to be shown? Because I always get confused if my image is being mirrored or not, or should it look more like this? Which one's better? We've got the okay. So no, says Gary. So is it right now? This is the question. Is it right now? Please tell me, because from my perspective, it looks A-okay. But from your perspective, is it good now? If it's not good anymore, I did switch it around at the old switcheroo. So MK says it looks good. Well, thank you for that. And I know that if you're saying it looks good, JJ, you're not commenting on my T-shirt that I'm wearing in that photo, which is, of course, Lehman Brothers. And it says Lehman Brothers Head of Risk Management. Which is obviously a bit of fun. You can actually buy those cheeky finance T-shirts on Redbubble. For those of you that don't know, I did own Redbubble shares and admittedly made a big mistake in investing and recommending that to our Rask members. It's one of the worst that we've made over the years, I'm sorry to say. But I did get those T-shirts off Redbubble, and they have lasted me a very long time. I got that one. I got a few others that I think it's an Enron T-shirt that says Head of Ethics or something like this. So it's all a bit of fun, but Paul says you can read it. That's good enough for me. So thank you for those that did just see in the chat. I did just drop in a bit of a survey here to try and improve the content that we offer at Rask Live. But also, if you scroll down, if you do click on the link, and I'll put the link back in the chat now. If you are watching this on replay, you can find it in the live chat on the side. The questions that are at the second half of the form are a bit longer. They might take you a couple minutes, so you don't have to do them right now or at all. They're optional, but definitely the first part of the form helps myself and the team design the content. For example, do you want us to cover more shares? Do you want us to cover more interviews, less interviews, more Q&A? And it just helps us identify what you want. But the second part of this form is actually for a series that I want to put together for you guys, probably in the new year. I'm working on something that goes beyond just investing, so just beyond value investing or stocks and these types of things, or ETFs and managed funds. I'm working on something that will probably take me, like the series won't take me a year, but it will probably take me a year to build it. And I'm thinking of doing it next year. I've put it off for a couple of years. But what I'm trying to do is build effectively like a roadmap for people through life, their financial life. and how you can go through the different stages of your life and answer the really big, important questions. And most importantly, avoid. Thanks for filling in the survey, Sam. That's great. Thank you so much. Most importantly, avoid some of the catastrophic mistakes that people make in their financial life. Whether you're 20 years old, you're 90 years old, you got kids, you don't have kids. What I want to design is basically a manual that's based on feedback from our community, but also from all of the hundreds, if not over 1,000 interviews that I've done with financial experts, CEOs, investors, analysts, financial advisors. I want to collate all of that into something which is like a manual that anyone can pick up at any stage of their life and follow it, and at least avoid the really big mistakes that people make in their financial life. And so if we can do this as a community, then I can share that feedback with you and we can go through it together. It's all anonymized though. Like we're not going. If I do share, I'm not going to share it back with the community and say, "Well, Greg from Townsville, he put in that he bought a 40-foot yacht and it sunk. You know, how horrible is that?" You know, I'm not going to be sharing personalized information, but just generally, we're going to pull apart the themes and try and work together on building something. In any case, tonight we are focusing on 2 topics. We've got 5 ways to be a better investor, and then we'll look at some companies that I want to look at. As always, Selfwealth is the official partner of the live show each and every week. Rob's in the chat for those of you on Selfwealth. If you're watching on ASA, if you're on the Australian Shareholders Association YouTube channel, hello to you, good evening. Don't forget to subscribe no matter where you get your information. We go live every Wednesday, just about. Last week was a pre-recorded session, but we go live every week, and you can subscribe and you'll get notified if you do that. So my joke of the week is this one right here. I've been seeing this joke online and I couldn't figure it out. So perhaps you guys can figure it out. Nothing starts with an N and ends with a G. And while you figure that out and tell me what the answer is in the chat, I will paste the form right here. So I'll put the survey or form, whatever, I'll put it in the chat, and it will. I'll also post at the end of the night so you can then fill out after the live show if you've got a couple of minutes then. Okay, so can someone fill me in on the answer of this joke? Like, what am I missing here? An oldie but a goodie, says Caroline. What am I actually missing? I couldn't figure this out, and I was thinking, this is a trick question, isn't it? It's got to be the word nothing, says CC. That's right, CC. It is the word nothing. So the word nothing starts with an N and finishes with a G. And I think the reason I got stumped with this one was because it's a capital G. I wasn't sure where this was going. So I'm glad that all of y'all got it long before I did. But it's one of those dad jokes, courtesy of Dad Says Jokes on Twitter, or X as it's known now. That's where that joke comes from. So the survey will take you about 3 minutes or 30 seconds, depending on how much depth you go into. So if you can fill it out after the live show, that'd be great. It just looks like that. Yeah, obviously we're not going to share any of your personal information. It's just for me to produce this content going forward. So in the coming weeks, we've got Drew Meredith is on next week. We're going to do retirement Q&A. So Drew, many of you will know, he's the managing partner of Waddle Partners Retirement Financial Planning, based in Melbourne, but have clients all over Australia, some international as well, actually. So he'll be coming on next week to answer questions. That is a 12 midday session, just so you know. It's got the asterisks there. Next week, it's a 12 midday session. Mike Kemp, the author of the Ulysses Contract, that is the following week. And Mike's going to come on and talk about some of the principles that he's learned in studying literally hundreds of years of stock market information and I guess strategies and these types of things. He's a wonderful steward of history, and the way he distills that information in the modern era is fantastic. We've got ETF Q&A, and we're going to hear from BetaShares. We've got Cameron Gleeson, who has been on the Selfwealth Live program before. It might be him or it might be Tom Wickenden, both well-credentialed and well-oiled investment specialists over there at BetaShares. So they'll be up for some Q&A. Tonight, we're going to talk about being a better investor. It was interesting. We've got Dr. Sam Huppert up here, the CEO of Pro Medicus. Just for those of you playing along at home, Pro Medicus recently today, Australia's best performing company of the past 10 years by a long way, other than those really speculative things, which I exclude, by the way. the company went on to hit an all-time high today. So absolutely unbelievable. I'll tell you something about that in a second. And full disclosure, I still own my shares. So interestingly, I was catching up with the Pro Medicus team this week. And I caught up with the CFO, Clayton Hatch, who's been with the company since 2008. And I said to them, I'm like, come on, guys. I'm like, if the share price is up, I don't know what, I think it's like 10,000% or something like this since this era of its life. And I said, your shares are up 10,000%. You're doing pretty well for yourself financially. Do you have to really keep pushing so hard in life? Like, isn't there other things that you can do? And just to give you a sense of the culture at Pro Medicus, and this is just only anecdotal of what my understanding is that the team care just as much about the person that bought at $87.29 as they do about the investor who bought at $3 or $7 in my case. And that just speaks to who they are as people at Pro Medicus. They've built a wonderful product that solves healthcare problems right around the world. In fact, I'm going for an MRI this Friday, and I think the hospital where I'm going, I think they use Pro Medicus' software. So I'll let you know how it goes. Not the results, but I'll let you know how it was transferred, all the imagery and that sort of stuff. But I think Pro Medicus is in that rare breed of category where it's probably a global standard business, just happens to be listed here in Australia. And just a wonderful team that's behind it all. But the reason I got onto this is because Sam did say, this is Sam here, he did say that he would come on the show. If we want him to come on, he would come on and answer questions. So do you want us to ask Sam onto the show either late this year or early next year? If you do want Sam, the co-founder and CEO of Pro Medicus, to come on, just give me like a thumbs up in the chat or something like this, because we can invite him on, and you guys can ask him, hey, what is it like to be the co-founder and CEO of Australia's most successful company? Like, you can ask him that question if you want to. He's a wonderful human being. So if you want him to come on, just let me know. And I can see that Nikita, you've said that you can't wait to see the responses to this final question. If you started a business, did it work out? Explain. Yeah, this last one here is because I have this view that starting a business is one of the best ways to grow really wealthy in life, but it is also one of the hardest things to do outside of managing your relationships in life. I think starting a business is bloody tough. We glamorize it in society. We say people are a success if they have a really good business, but it is not an easy road to go down. So yes, it looks like everyone said yes, please, to Sam. Okay, great. Yeah. Sam is a very humble and insightful person, so it'd be great. Okay, let's get on to the first segment, and then we can quickly move on to that folks are a bit more excited about, which is the companies, although this is probably the more prudent. So I've just got 5 rules, five ways to be a better investor. And as we go through this, just shout out your feedback and what you think of my 5 things. I did take these from Kate and I on the Australian Finance podcast. I'll come back to this one with Luke. Kate and I did do a podcast on 5 ways to be a better investor, and I've kind of tweaked them a little bit. So if you've seen some of it, it's probably why. Let me know. So JJ, you said you've bought Pro Medicus for your grandson's portfolio. There you go. What an investment to make. I hope you bought it many years ago. Thanks, MK, MLS, everyone who's given us. Caroline, you've given us 6 thumbs up. That's plenty. Thank you. Okay, so I'm going to be quick here. Number 1 is a lot of people check their brokerage account too often, in my opinion. I'll explain how I do it, or you don't need to check your brokerage account to know what's going on. Number 2 is people think that if they just buy enough shares or enough ETFs, they're diversified. That's not the case. Number 3 is some people think that to be a good investor, you have to make it something that you're truly passionate about. You don't. We're all here because we probably are, but you don't have to do that. Number 4 is I honestly believe you need to have a plan, and the plan doesn't need to be complicated. That's probably the thing that I would say and we'll get to that in just a moment. Number 5 is that you should just know the essentials of personal finance to be a better investor, and I'll explain all of those in a moment. So just maybe just as a bit of an ad hoc survey for us all, how often do you check your brokerage account? Like or your superannuation if you're in retirement, how often, how many times a week? Why don't we do that? How many times a week do you check your investment portfolio? And I'll give you some context. For me, I actually log into my brokerage account that I use to trade. I log in once every 2 months, maybe less, maybe every 3 months. Maybe every 3 months. Oh, Stuart, you've just said, great comment. You've just said that you've just finished Mike Kemp's book and it was a great read. Well, actually, I've got a treat for you. I'm just going to bring this up. Talk about, here's something I prepared in advance. Let me just get this up for you, for everyone. Because I think this is going to be my little early Christmas present, not from me, but maybe from Mike and everyone else. I'm going to put something in the chat really quickly. I'm going to call it books. Rob, you've said you check Selfwealth every weekday, but you reckon you've got a pretty good excuse. That's Rob from Selfwealth. Tends to make sense. I can't put my finger on why you would be checking it every day, Rob. Just the fact that your name says Selfwealth in the chat, it probably has something to do with you checking Selfwealth every day, which is fair enough. Gary said 2 or 3 times per week. Paul said once a week. Barry saying not at all. Caroline saying daily, doesn't change my plan, but it does give me a thrill. Just a rush of blood. Hey, Caroline, it makes sense. Paul says the same for him, except Caroline, it's only when they're dropping. Colin says once a week. Okay, so here's my Christmas present. Okay, so Major Street Publishing is one of the biggest personal finance and investing book publishers in the country. Probably are the biggest, I'm guessing. Now, if you use this coupon code, I'm going to put this in the chat, coupon code Rask Xmas. So if you click on one of these books, let's say that's Kate, my co-host, that's Anna's new book. This is Mike's book here. I know a lot of you guys love this. So let's say we click on it. Oh, you know whose book was also very good? Is Scully's book over here on the right. And Evan, all these books are bloody good. Anyway, let's say you add it to your cart. You go like this. You go check out. And we're going to test this coupon code live. Let's go Rask Xmas. We're going to chuck that in. Look at that. 50% off. 50% off. If you use the coupon code Rask Xmas, it's RASKXMAS, yours 50% off if you want one of the books. Obviously, I do not get anything for mentioning these books, although I've got to admit that I reckon Mike's book is probably one of the best investing books written in Australia as long as I can remember. If you have time at Christmas to read an investing book, that should be the one. You don't need to read it all in one go. In fact, if you did, I'd probably think you're maybe some sort of cyborg because it's kind of dense in some parts and it's got a lot of facts and numbers in there to back up his points. But it's a wonderful book to have on your shelf and you read maybe a couple pages every few days. I think it's wonderful. Martin, you said you check your brokerage account 5 times a week, like watching the red and green lines. Interesting. NB, sometimes 4 times a week, sometimes not at all. Okay, you say you're investing, not trading. That's cool. Okay, so yeah, if you want to, grab one of those books, buy it for a friend, do whatever you want. It's 50% off, so you may as well do it. Okay, no worries, Rob. You're very welcome. Okay, so checking your brokerage account, many of you do a couple of times a week. Now, I don't need to check my brokerage account because I used to use it for announcements and that sort of stuff. You can actually just get a free Selfwealth account and you can get financials and fundamental data from Refinitiv and all that by going into your Selfwealth account. So Selfwealth, if you go here and you log in, you can actually let's get all this up and do my fingerprint on my Mac now to put a password in. You can actually just go in here and you can type in, say, Woolworths, and you can get fundamental data straight from Selfwealth. Like this is just a free account right here. So you can create an account for free. I'm sure Rob's got a link that he can drop in the chat to do this. You can log in and you can get all the fundamental data as well as the announcements and that sort of stuff here. Now, if you don't want to log into your brokerage account at all, you can use this free website called Market Index, and you can scroll down to where it's got announcements and you can go in here and you can click on the PDFs, or you can go to the ASX website, of course. I just find this is easier and it looks nicer. If you want other information, so let's say, for example, you want to dive really deep into the data and you want to go back, you can get yourself a ticker This is called Ticker Terminal. You can get yourself a ticker account, and this is my favorite for getting financials and informations, and you can get transcripts. So say, for example, we go to Woolworths, they had a shareholder call recently. You can go in here, you can even just jump straight down to the question and answer session, and you can say, I don't know, what would be something that you might find in a transcript for Woolworths? Let's say Big W. And you can see that Big W was mentioned 14 times, and if you just wanted to read those bits, you could. And so I use Ticker for all this type of thing. And I also have alerts on my phone through apps like Stocklight and that sort of stuff. So I hope that makes sense. Cool. Okay, so that's the first one. I also don't like to have apps on my phone because I just don't like the temptation. As this Morgan Housel quote says, 99% of long-term investing is doing nothing, but it's the other 1% that changes your life. Now, when it comes to diversification, this is where people go wrong. So some people will say to me, well, I'm diversified because I own 20 or 30 stocks. And all the bank shareholders in the room don't need me to tell you that. You've heard it 100 times before. Everyone says, well, if you own 4 banks, you're not diversified, all that sort of blah, blah, blah. But with the modern invention of ETFs, even though I say modern, they've been around for 30 years, you don't just get like one ETF providing diversification on the number of shares, which is what a lot of people think. You can also have diversification where each individual component diversifies you across different asset classes and geographies. So most stocks, for example, that you might buy, like if you got this basket up here of 30 stocks, they're probably 30 stocks from Australia. So in that sense, you're exposed to the ASX, like the system keeping up and running, like say, hello Optus, for anyone that just relies on Optus. That's a good example of diversification. Here at Rask HQ, in this very premise, at my house, we run on a Telstra. We have a Telstra connection for our hotspots. We use the NBN through Aussie Broadband, and we have a Starlink for backup, just because we rely on this important, device, which is the internet and this computer in front of me to do my business. And so diversification comes in all forms of our life, but in particular in stocks, some people think that if you just add more stocks, you'll be more diversified, and that is not the case. All of the literature doesn't support that. All of the results does not support that. But with ETFs, you can still have your 30 stocks, say your Aussie stocks or your whatever, but then you can put bonds in very quickly, like through the IAF ETF. IAF is an ETF from iShares. It's the largest Aussie bond ETF. And right now, those bond ETFs are providing great income potential as well as some upside. But you can also add things like emerging markets. And so in here, it's not an ETF, but you can get the FEMEX fund, FMEX, which is emerging markets. So like India and places like this, you can get exposure to through the Fidelity fund, all inside your brokerage account, quick and easy. So the way to do this test is when you build your core and your satellite portfolio, just remember you now have more tools at your disposal than ever before. And if you just owned Aussie shares, you're not diversified. It might be great, but you're not diversified. And if you just have 30 different stocks, it's not true diversification. In fact, Peter Lynch might call that diversification. So what we're looking for is portfolios that are spread across different asset classes and different geographies. So I hope that makes sense. Okay, Hammer, you've just said, just bought the Ulysses contract using your Rask code. Thanks very much. I was waiting for an audiobook version, but this is too awesome. Wonderful. You're very welcome. Hammer, if you have a Spotify subscription or if you have an Amazon Prime membership, as I do, you can actually get books through Spotify now for free. You can get 15 hours a month through Spotify for free. And if you have an Amazon, there's a thing called Amazon Reads. Not a lot of people know about this. But if that's the case, then if you have a Prime membership, you might be able to look on Amazon Reads. Dave, you said, what's your best portfolio building podcast? Dave, a few weeks ago, we did a chat where we spoke about building a core and a satellite portfolio. Let me just bring this up really quickly. We did one a little while ago. I think it was this one or this one. The first two here, Dave, I'll just copy the link. You might have to listen to both, but we talk about a core and a satellite in both. So that's coming through the chat now. So just so you know that's there. Okay, so core and satellite, we want to be diversified in the core, but then the satellite, you can kind of do a bit more of what you please. The third thing I want to talk to you about is investing isn't for everyone, but it is important. So the idea of learning about investing is important, but there are limitations to it. So let me show you what I mean. Many of you have seen this chart before. This plots basically my journey through time as an investor. I started down the bottom here. My very first investment was I bought shares in NAB because I walked past a NAB branch and I had no idea what I could invest in. So I bought NAB shares. Then I started getting into speculative resources companies because I thought, well, hey, I'm here to make money, aren't I? Let's go and buy the riskiest thing I can do. Then I put money into a CFD trading account, which stand for contracts for difference. If you ask me, they stand for blowing your money up really quickly and making other people rich. That's what CFD stands for in my language. But basically, I was losing $5,000 a day and it was just disappearing into thin air. So then I came down the other side and went, well, maybe I take less risk and I go to warrants on these companies. Warrants, if you don't know, are a bit more like options. They're also complicated. And then I thought, that's still too complicated because I'm losing a lot of money. Why don't we go down and make it even simpler again? I bought Pro Medicus in the early days for about $7, maybe a bit less. Then I bought Apple, realizing that so many people underestimated the switch to subscriptions and away from just selling iPhones. And now I spend most of my time building my core portfolio with ETFs. And we can all probably go on a similar journey. If we plotted our own humility curve, we could probably see that. But my job when trying to help you invest better through the Rask Live and all the podcasts and Selfwealth Live before that and all this stuff is to try and move you along this humility curve. If you avoid CFD trading, I've done my job. If you maybe have some speculative companies, but what I did in building my portfolio, to your point before, to your question before, is when I built my portfolio, I didn't really think of a core and a satellite approach. If I did, I would have saved myself a lot of money because I would have just put this as my speculative resources company up here and not in my core, because I put it in my core and I lost thousands and thousands of dollars. Same with CFD trading. That should never, ever, ever be in someone's core, in my opinion. 77% or something of people that use CFDs lose money. So I should have contained them in these parts of my portfolio in the satellite and kept the diversified core of ETFs and blue chip shares, maybe listed investment companies, that sort of stuff. MB, you've said previously purchased both of Danielle Ecuyer's Shareplexity books. Love them both. Highly recommend. You're saying, if I go back here, you are pointing out Shareplexity 1 and 2. Yeah, Danielle Ecuyer is now on Ausbiz. Good on her. What is a good split for core satellite? I think Dave, it really depends. But what for a lot of our community at Rask, I can only speak generally, obviously, but in our community at Rask, I think what we tend to find is most people have probably 80% of their core, 70 to 80% in LICs, REITs, ETFs, and managed funds. I'd say as a general rule. I don't know exactly. And then a lot of the people who've been investing a long time still have lots and lots and lots of individual shares, like blue chip shares like Woolies, BHP, etc., because they've just held on to them so long. And if they sold them, they would incur tax. So it doesn't make sense for them to sell it just to buy an ASX 200 ETF. They may as well hold on to it. Okay. So Mr. Morkra, you've said what is, and your question relates to another similar one here, which is that from beginning to end, how long was this journey? So how long was it for me to go from buying NAB shares to ETFs? Well, that took me about 5 years, 4 or 5 years, I'd say, to go from here and go through the process and end up in here with a core portfolio. It probably took me 5 years. Keep in mind, I've owned Pro Medicus and some of my shares for a very long time, right? So I've been investing for quite a while now. So I hope that makes sense, Ali. I hope that makes sense. I would say me buying NAB shares and just trying to figure out investing, that was probably 6 to 12 months. And then I started to get more risky because I thought, well, I'll just take a little bit more risk. And then the CFD trading, like this patch of time is probably overrepresented in the chart. It was probably only about 6 months. And then I realized how horrible trying to do what I was doing was. Someone actually really early in my career, he wouldn't even remember this, but someone made a very, 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 very profound comment to me early in my investing journey, and I wish I paid closer attention. So Daryl, if you're listening, if you're out there somewhere, you know who you are. He sent me a message and he said, this was the last time I'd ever spoke. It turns out this was going to be the last time I would ever speak to him. And he said to me, Owen, you are so young. Do not waste your time investing in anything that won't be here in 20 years. And I just thought to myself, at the moment, I was right. I was, getting my cowboy hat on and jumping on these speculative resources stocks. At the time, I was like, yeah, it kind of makes sense, but I didn't pay enough attention. So honestly, like, if you just think, go and buy your speculative stocks if you're into it. Most people aren't into it, so they should just build their core portfolio and stick with ETFs. That's the lesson here. But if you're going to buy speculative stocks, if you're going to dabble in crypto, just do it in a contained way. Put it in the satellite. Do not let it get into your main portfolio. Don't be so starry-eyed that you think that that is the one thing. That is a fundamental mistake, in my opinion, no matter how good it is. So I think that's kind of one of the takeaways. MK is saying, where can you buy the personal books from? The financial books for half price? Just go to that link. I just put it back in the chat. majorstreet.com.au/collection/personal finance books. Just put in the coupon code RASKXMAS. RASKXMAS. Okay, so the other thing that I wanted to do is to show, like, if you don't want to get into investing, you have a few choices, and I'll get to them in a minute. You can get financial advice, or you can follow a professional. So that's not to shamelessly plug our membership, but that's why we created the membership. Here's a post from Kevin, one of our analysts, recent post. That's why we started our Rask Core membership. So people could follow us. If they didn't want to do it, they could just get a simple ETF portfolio. If they wanted stock research, it's in there, and they can ask questions and do all that sort of stuff. So there are options for people who don't want to make investing a hobby. Superannuation, financial advice, low-cost ETFs. Follow someone else who is a professional that you trust. Whew, okay, I'm going to breathe for a second. You know what, Chef Circle? You just made a comment. You said, think of the amount of the amount of NAB dividends over the years. Yeah, I would have got so many dividends from my NAB shares, but this is the reality of the situation, Chef Circle. As good as NAB's dividend has always been, I remember thinking about this. Please don't judge me. When I was going through my early part of my investing career, I was like, hold on a second. NAB's got a 9% fully franked dividend. After franking credits, that's like 14%. I could just get a loan or take out one of these zero interest credit cards, and I could just put all the money in a brokerage account and buy NAB shares. That was how my thinking was at the time. But that wouldn't have made as much sense as doing this. And I'll show you really quickly. That wouldn't have made as much sense as investing in Commonwealth Bank, which had the smaller dividend at the time, but has substantially and emphatically outperformed. So that would have been like a dividend trap. Obviously, this chart doesn't include dividends, but CBA has got a big dividend as well. So the risk for me then was buying NAB, which was the inferior investment just because it had a big dividend. Okay, so I have a plan for action. I'll see if I can get this up and share it with you. I'm not really proud of it, but I'll share it with you in any case. I'm just going to jump into our members section really quickly. I'm going to give you this here. So this is, I'm going to update this based on the feedback that you guys give me, but I'm going to call it investment plan, and it's going to be in the chat now, probably ahead of, there's a bit of a delay. But this guide here, and I'll just make it a bit bigger. This guide here was our early attempt, Rask, to try and help people prompt themselves on investing. To say, where is your portfolio at today? What do you use for brokerage? Who are the professionals you've got? What is your income? How much are you investing? How much are you saving? How are you going to invest? How are you going to manage tax? And it's really just about prompting you to reflect on your investing. It doesn't give you an answer. It's just a PDF that prompts you to do it yourself. I'm going to revise this because I think it's too complicated and people don't have the answers when they go in, so they get overwhelmed. But the point is, you're not supposed to have the answers. You're just supposed to reflect on it. And you can download this yourself. Just click download in the top corner here. But you can go and check this out. And it just prompts you to have some type of plan. Dave, you've asked, is that from our Value Investor course? It may be in the Value Investor program as well. That's from our membership, Dave. That website you just saw was from our membership. The Value Investor course, I don't know if it has it. Maybe just, sorry guys, I should know this. Oh yes, here it is as well. There's a version of it here. This is a simple one as well, just in the Equity Mates and Rask colors. That's all. So very similar, Dave, if you've already done that. Ali, how old is Owen? That's a good question. People have guessed it before. I look older than I am, is the question. Maybe that's a reflection of my maturity, but though I wouldn't say that with a straight face because Rob's probably laughing, thinking mature. Yeah. Anyway, so back to this. If you do have a moment today, once you're done with the live tonight, and you're sitting there and you're looking at your portfolio and you're thinking, God, I really don't know what I'm doing, where I'm heading. It looks like I've got a bit of a messy core and satellite portfolio, all this stuff. Just go into the notes app on your phone, send yourself a text message, send yourself an email. Go in here and have a look at these questions and then pop them down in that Google Doc and just say, what does my portfolio look like right now? What is my long-term financial goal? And put these things down. And by prompting yourself through it, a really, really, really good financial advisor once taught me that the benefit of having a plan, so any type of plan, even if it's just 2 sentences, the benefit of having a plan is for those 1% moments that I was talking about earlier on with Morgan Housel's quote. It's for those moments where you don't know what to do, but you know you should do something because everyone said it. In a crisis, you should sell your bonds and invest more in shares. So that is the thing that I want to impress is like, this is for those moments. You put this down now, you do the work now, so that during the next market crash, which will come sooner or later, you can go like COVID, you can go, hold on a second, my stocks are down 20%. That doesn't make any sense. I'm going to take the money out of my cash and I'm going to put it in there just like I said I would. And that's when you'll make money. Daniel Lee, you've asked a question. Hey, Owen, do you have courses such as investing in individual stocks? Yeah, absolutely. I think this course right here, the Value Investor Program, Daniel, which is at the top of the page, the Value Investor Program. If you Google that and you put in the coupon code DEALS200, it gets you $200 off, so it's only $299. But you get all of this information, and you get all the course, all the quizzes, all the valuation frameworks, all of the everything, all the best podcasts we've ever done, all that stuff. But not to shamelessly plug it too much, there's also a free version, not of this one. It's not nearly as good as this, but there is a free course that I did in 2018, I think it was, on investing. It's an intermediate valuation course, and it actually explains how to value Woolworths using 7 different valuation techniques. And I've got all the spreadsheets and all this sort of stuff you can download. Geez, I look pretty young there. So Ali, there you go. You can guess how old I was there. But it actually values Woolworths from 7 different perspectives. And you can just update the model if you want to do a Woolworths valuation today. So there it is. You get all that for free. So this is called the Value of Everything or Share Valuation course. Okay, I'm getting distracted a lot tonight, but I will continue on. Where was I? Have a plan. We've got that. Okay, essentials. I'm going to be quick so we can move on to some stocks. So the essentials. Caroline, you said, my plan is the reason I don't panic when checking my brokerage every day. I tell myself it just won't matter in 30 years. I'll be sick of checking within 5. Yeah, probably, Caroline. It's a good one. If anyone wants to say in the chat, why are you investing? Like, I would love to hear that. I'm investing because I want to buy a farm, to be honest. We live on a great little block here at Casa del Rask at the moment. But my wife and I grew up on a farm. I'm a farm boy at heart, and I want to get back to land for our kids. And so for me, the goal in the next 10 years is to buy a farm. And indeed, we're looking. And so in my opinion, the best thing that we've ever done for our investing is decide on that plan of we want to live on a farm, then work backwards. So Precipice, you've said, say you have 10K in Bitcoin and that is about 30% of your portfolio, and your dollar cost averaging $50 a fortnight, would you just ride it out or pay the tax and cash out? Just as a rando. So you're asking just as a generalized question. Obviously, I can't give personal advice. Although Bitcoin isn't considered a financial asset in the legislation. So it's a free-for-all. But honestly, what I would say is that, in my opinion, even though Bitcoin has done exceedingly well over 10 years, and a lot of our community at Rask own it, I think about 7% of our community, most of them have it as a satellite position, which is in the single digits percentage. And that's just because even though I won't say crypto, I'll say Bitcoin as a market itself has grown in recent years, it's still tiny in comparison to shares, property, infrastructure, bonds. That part of the world is so much bigger, and I don't think that's going to change. So that's my situation. Caroline, you said myself and Captain Fi may end up in a bidding war against each other. Well, Captain Fi is actually, if I'm not mistaken, from Adelaide. So I don't think he'll be buying near me. Okay, finally, the essentials. Pardon me, I've been talking too much. So these are the essentials that I kind of wanted to get across that will make you a better investor, because they will help you sleep easy at night and they will help you compound faster. Number one, are your super fees below 75 basis points or 0.75%? Now, I want to be very clear here. When people talk about their superannuation fees, let me get rid of this. What they think, I'm going to show you something, right? So here's you, stick man or woman, right? You choose to go with a super fund like Host Plus, for example. Host Plus, you think, great, I'm with Host Plus, wonderful. Then you go down and you choose an investment option, and they'll give you a few different options, right? They'll say this one, that one, this one, so on and so forth. Now, these things down the bottom here, these are called investment portfolios or pre-mixed. The fees that you pay for your super fund here are called an admin fee. Now, these fees are like, I don't know what Host Plus is right now, but I'm going to say it's like $80 to $150 a year. So nothing, right? Bugger all. That's just for them to operate the super fund. But the big question mark is, which option do you choose underneath it? And this is where the fees are really, really expensive if you get it wrong. So some options inside the same super fund, right? I don't know if this is the case with Host Plus. Inside the same super fund that you think you're with, you can have someone in there who's on 0.02% as their fee for managing their super, or the investment strategy down here. And you can have someone that's on 1.2% in fees. And they both say, I'm with Host Plus. But one of them has chosen the wrong option, and the other one has chosen a low-cost option that they thought they had. And the difference is, okay, you're like, okay, 1%, not that big of a deal. Well, when it's 500 grand, it is. And when it's 50 times more than the other option, that's when it's a big problem. So go in and check. And when you calculate your fees, all in fees, don't make sure you separate insurance, because insurance is separate to this cost. So that's something I might say. David Lee said, I'm investing for retirement so that I don't have to rely on a pension. Love it. Goon, you've said, my plan is to travel overseas every year until I die. Experiences are more important than stuff. Bloody oath, Goon. I like that. Christiana, you've said, I want to make work as an option in 10 years from now. I love that too. Work on your terms. Benny, you've said his super must be below 0.75%. The Stickman has a good super. So Stickman has super below 0.75%. Stickman is in a blended option. By the way, sometimes inside your super funds, you can choose, even if you're not an SMSF, as some people have suggested, you can choose which investments you make. It's called SMSF Lite or Member Direct with Aussie Super, and you can choose which investments you want. So if you want the Vanguard Fund, for example, you can do that yourself. That's that. Matt, you said, should we be expecting fees less than that in an SMSF? It depends. In an SMSF, Matt, you would know this. You can have 5 members, if I'm not mistaken, meaning that 5 individual stick men and stick women could be in the same super fund. So instead of Host Plus, you would have SMSF, and there could be 5 of you all investing in that thing. And that's what brings down the fees. And so the benefits of an SMSF come when you've got 500,000. Like the official data says 500,000 from the Productivity Commission. Some people will say it's 200,000. But if you have 5 people with 500,000, you can all split the fees, right? There's a lot of detail in there. See a financial advisor would be my sense. But yes, I mean, low fees, they don't have to be that high, even in SMSF. So insurance, I don't know if I'm having one of those cursed months in my life, but I have found that so many people have got major sicknesses around me this month, like life-changing sicknesses this month. And if you haven't reviewed your bloody insurance, go and do it. Now, if you're in retirement mode and you don't have liabilities, but if you're younger, you got kids, you're single income, you work in a high-risk job, you got a mortgage, you got a business, get some bloody insurance. That's done. Make you a better investor because you'll be able to sleep at night knowing your family's taken care of. I've always said that it's better to buy a house. People stuff up their property, so they make big mistakes when their first investment. It's okay if you buy an apartment for your first investment, but your second investment should ideally be a house because it will appreciate faster. My wife tends to disagree with me on this. She says, well, maybe it's a lifestyle asset. I'm like, yeah, but you can have both a lifestyle and a good investment for the long term. It doesn't have to be fancy, but it helps. Okay. Testamentary trust helps for people in estate planning if you've got a bigger balance. So estate plan, you can get a will from a lawyer for a few $100, or you can, it's not great to do it for yourself. Some states allow you to store your will with the state. So sometimes there might be like a state will office, and they'll store it for free for you. So you can do your will, get it done, and then you can store it with them safely. So you don't have to have a fireproof safe, all that sort of stuff. One of the things that investors get wrong with their portfolios is when they die, obviously they don't care anymore about it, but when they die, their family has to pick up pieces and they go, did they say they were with Selfwealth or with ComSec? I can't remember. And good luck trying to find out where the money is and trying to get into the account. So leave what we call a statement of assets. The statement of assets in this plan here, it's also in here, is a statement of assets is something like this, where it says how much roughly you've got and where it is, so that your people who, like your family, if you're incapacitated, they know where to go. It just saves them the heartaches. It takes 2 seconds. So that would be that. See a financial advisor for the rest. Always have 6 months of emergency cash so that you can invest confidently in a downturn. If you're over 50, contribute 27.5K to super if you can afford to, because it will compound faster in the lower tax environment. And set real calendar reminders to check in. So that's my essentials. I fit like 10 things into the last 5. The point number 5 says about 15 points on my 5-point list, but you get the idea. I hope that makes sense. Dave, you said, do you need to work out the management expense ratios for each M fund / ETF, then add up the proportion to get overall fees? Yeah. So Dave, the way you can figure out overall fees for your fund, if you're with a super fund, like say Aussie Super, like an industry fund, they'll publish how much the fees are. So if you go in, let's have a look at where are the fees? No. They make it bloody hard to find things these days on these websites. Okay, here we go. Fees. Okay, so the admin fee here, you can see there's like a flat fee for most super accounts. So it's $1 a week, and then there's a small extra one there. So that in my chart, that's this bit up the top here. And then it depends on which option you select underneath that. So the investment fees and costs. This is where it will vary based on whether you choose a pre-mix or a DIY mix option. So this here is what I'm talking about. That's the bigger fee that people don't realize, and it depends on the investments. Now, if you go into a pre-mix option like growth, balanced, conservative, they calculate that whole thing for you. But if you start mixing and matching your own shares and ETFs in there, you have to calculate that yourself. Dave, sorry, mate, you did say you have an SMSF. Yeah, so the calculation is quite simple, Dave. You just get the fees across all the funds and then work out what percentage that makes up of your portfolio, or the value of that you've got invested in that, and that will tell you what the fee is. But be careful with some funds active funds, Dave, they may have performance fees that haven't paid out yet. That's how you do it. NB, you said, according to my Aussie Super, 0.01% is the fee. That's incredible, isn't it? Jonathan, final question before we get into the stocks. You said, thanks for answering my question, mate. Might have to boost up my other investment to cut back on my Bitcoins. Love your work, mate. Oh, so that was from Precipice. Sorry. Jonathan, you've said, a general question. I have a large amount of CBA and Telstra shares, and watching your show, I realize my portfolio is not quite right. Would it be better to hold those shares or start again? That's probably a bit personal, unfortunately. Jonathan, I know you've said general question, but what I can say is the way I work out whether it's worth selling or buying is there's one big qualifying criteria. Some people who are in retirement don't pay tax, right? So in that environment, it makes sense to sell and rebalance a portfolio. But for accumulators, the finance world isn't built for us. And so what happens in pre-retirement mode is you pay capital gains tax. And depending on the way you calculate capital gains tax, you do have some flexibility with the way you do that. That's why when you sign up for ShareSite or Navexa, when you create a ShareSite or Navexa account, they will ask you what type of accounting method you want to use, first in, first out, that kind of thing. And it can sometimes it can even optimize for your portfolio. Like it will say, this is probably the method you want to use. And then you can make a more informed decision around buying and selling. But for me, I mean, there's an old cliche that you should never let the tax tail wag the dog, which is effectively saying, like, don't just let tax be the only decision for investing. But at the same time, it is a real cost for accumulators. So I would say that just generally speaking, you've just got to sit down and do the number. There is an opportunity cost with some tax there. Okay, so let's have a quick talk about these. We'll probably go for I thought I could get through that stuff quicker, but I rambled like a mess, probably because I didn't do it live last week with you guys. These two companies. Now, these two companies, we're going to say watch list companies. And the companies are very different. Does anyone want to take a stab at why I might have picked these two companies? Does anyone want to say you could have an opinion on one or an opinion on the other or both? Why do you think I would have been saying let's chuck these on the watch list? What do you think? What do you think? And while you're writing that in, I will answer Paul's question. Paul says, Owen, are you worried of using all your investments for the farm, or will you still have investments after this point? Just asking, as I also want to invest to live in my dream area, but also don't want to have no investments after that. Yeah, well, I'm not too worried about so this is what we call sequencing, Paul. It's like when you get to the point, so say your portfolio slowly builds up in value, and at that point, that's when you reach your goal, right? At that point. And so at what point back here do you start preparing for that? I'm not too worried about it, Paul. Like, I think I would be planning. I'm still probably 5 to 10 years away from my dream. So for me, it's still quite a long-term time horizon, but definitely like I will be monitoring that every year with my accountant, with my mortgage broker. And I will be monitoring my tax position. I'll be monitoring whether my assets are liquid or illiquid. I obviously, my biggest investment is in our company, the Rask Group, which is not exactly liquid. Like I can't just go and sell all my shares tomorrow. I mean, I probably could, but I wouldn't get a great price for them. So I've got to prepare years in advance. Okay, so Mark, you've said because the investment is beaten up. And yeah, so both Resmed and Magellan have suffered from a dramatic sell-off in recent times. Magellan, for those of you that don't, Resmed, for those of you that don't know, is the world leader in CPAP machines. So basically they create ventilators or devices that help people breathe when they sleep. It helps avoid things like, that is wonderful, Daniel. I'm going to come back to that in a sec. It helps people with sleep apnea, hypertension, a bunch of other things that can damage their life, frankly, like the way they live. And so they create these devices. Let's see if we can get one up on the screen. Let's see if we can get this up. So CPAP stands for continuous positive airway pressure, I think it is. Daniel, you can correct me off the top of my head. But basically, you'll know if someone uses one of these machines because it sits beside their bed, it plugs into a mask, and people use it to breathe better while they sleep. And this is the world's leading therapy for treating sleep apnea. Now, Daniel in the chat has said, as a medical practitioner, we shouldn't be worrying about Resmed as obesity is not going anywhere and sleep apnea will need to be treated with CPAP machines, buy and hold. And Paul, you have followed up with a great question. What about Ozempic, Daniel? So the reason Resmed has been sold down is because of Ozempic. Ozempic is a weight loss drug. Originally for diabetics is how it was predominantly used. But basically, people are worrying and extremely fearful about this thing called Ozempic. And Ozempic has been such in demand that it basically reduces your appetite. And it's been in such demand that there have been media reports, I don't know whether they're true or not, suggesting that even diabetics cannot get the medication that they need because so much of it is being taken up by people who are trying to lose weight. Now, the studies that I have seen show that Ozempic has been tested in people who are very obese. So we're talking about people who maybe 120 kilos in one of the samples that I saw for testing, 120 kilos. Now, this is a problem because Resmed's audience primarily so far has been middle-aged men who are overweight. However, in recent updates, and indeed Luke covered it here, Luke from Seneca Financial Solutions, if you know Luke, I'm going to put this in the chat, Luke's article, and that's in the chat. You'll get that in a sec. He goes on to say something which is quite interesting, is that a late-stage trial, I'll zoom right in, found that a high dosage of the drug Ozempic helped obese adults lose 15% of their body weight. The once-a-day pill does have some side effects, mostly mild to moderate nausea, constipation, diarrhea, and vomiting. This is all relevant to Resmed as sleep apnea has until recently mainly been diagnosed in middle-aged obese men. However, Resmed's management are quick to point out in the recent annual report that nearly 40% of new CPAP patients are female. One of the reasons that Resmed has been sold down is also because their gross profit margins have been squeezed in recent times. And there are a few factors for this, but the predominant reason is actually a good reason why their profit margin's going down, because they're actually selling more machines and less masks and less accessories. So when you sell a machine, it obviously costs more for you to build the machine. And so their margins have decreased slightly, but it's actually a good thing because over time, they should actually be more profitable as a result. So Daniel, turning back to you in the comments, you've replied just to Paul saying, Ozempic can only help you lose around 5 to 9% of weight. Still not enough to treat sleep apnea. I wish we could treat sleep apnea with Ozempic. Great. That's good to actually hear. That's really, really interesting. So Paul, you said loss of weight and giving up smoking helped my sleep apnea, thankfully. Matt, you've said, I'm sorry, but isn't the sleep apnea trial still going? From what I understand, yes, that may be the case, Matt. I can't remember the exact study that I referenced, but maybe if you have a link to it, you might be able to throw it up and see if it's the same one. Caroline, I don't know if you're responding to us here. This question was addressed at an AGM. I think when you say Resmed stock, I think at the end of the day, I think with Resmed, the reason that the business is so interesting right now is because remember, folks, that when we invest in companies, and it comes back to keeping things simple, is even though we have a tendency to extrapolate the here and now into the future, let's just think about a range of outcomes. First of all, let's say that people that use Resmed now to treat their sleep apnea, or the stuff that they use out of hospital and all these things as well. Let's say, for example, that Ozempic is the number one thing. Are they going to stop with their device? Probably not. They'll probably use both. And that's the downside, right? On the upside, we have Luke's case here. The sleep apnea addressable market is huge, estimated to be approximately 900 million people globally. And with only 16 million people on CPAP devices, and with 80% of people undiagnosed, this exceptionally large market remains underpenetrated. So what we have at the moment is we have one of the ASX's best companies, high quality, huge market, industry leading, well-run companies that is now trading at a very, very, very steep discount to its long run average. So I'm not saying this is a perfect thing, but if you look back in the 20 plus years of history of Resmed, this really hasn't happened. So sure, there is a version of this where Ozempic just dominates everything, but there's probabilistically, that's not the case. Base case, they maybe coexist. Worst case, Ozempic wins over the next 10 years, but people will still be using their Resmed device for now. And so I think that we'll do more research on this in coming weeks, perhaps on the Rask Live show. But I actually think, like, I don't, as someone who invests the majority of my core portfolio in ETFs these days and diversified conglomerates and LICs and that sort of stuff, I don't get that excited by individual companies, which is why I don't log into my portfolio that often. But I'm struggling to find really good reasons why now would not be the time to do further research into Resmed. I'm not saying it's an out and out buy. I'm not saying it'll be easy, but I just think there's so much going for it. And I just think that now is the time to at least have it on a watch list. And let's jump up here into valuation and the ticker terminal. This is just a very primitive valuation, but one way we can look at it is we can just look at the price to earnings ratio through time. So, effectively you're buying Resmed shares today for a multiple that's similar to what it was in 2017. So there you go, Goon. You said it's not just obese people. If you are tall, fit, and thin like myself, an elongated lung has the same sleep apnea result. Martin, you've said, can you compare ASX 200 with Resmed over 3, 5, and 10 years? I can do that. So let's bring up Resmed. Let's go in here. Let's compare it to ASX 200. There we go. So over 5 years, here we go. We can see what Resmed has done over a bit longer, so not quite 10 years, but over a very long period. You can see it's obviously outperformed since then. I could get it up in one of the other pieces of software, but there you go. That's kind of where it is. Daniel said, you said, Resmed is a great company and a quality company. I believe in them. I am buying these stocks and will hold them for a long time. Daniel, can I just ask a follow-up to your question earlier on? Do you have experience with CPAP machines or anything like that? Because I'm interested, because there are some alternatives, right? Like Philips and all these other things. I just don't know if there's anything else in the market that you see that you think is quite interesting. In any case, I think Resmed is a super high quality business. I think its market is growing, not shrinking. I think it's got the industry leading product. It's made some acquisitions along the years to grow its offering, like through its SaaS business, which is still in its infancy, to be clear. If you want to learn more about Resmed, the single best thing you can do is read, I think it's the first 30 pages of this. It looks like a very boring document, but it's just its latest annual report. See this thing that says business up here, 22 pages. This thing right here, you just read through that, and it tells you everything in very plain English what it does. It actually even links you into some of the academic studies that were made came out to and formed the company based on so many things like this. So go and check that out. Let's see if Ozempic is mentioned much. Okay, let's have a look. Doesn't look like anything to do with it is mentioned in the most recent annual report. Okay. Daniel said, I don't have personal experience in prescribing CPAP machines as I am not a respiratory physician. You are a GP. Okay, great. Well, it's good to know, Daniel. Thank you so much for sharing your knowledge with us. Now let's quickly, for the last few minutes, let's jump to a totally different company and for a different set of circumstances. So many of you are familiar with Magellan. So Magellan was one of Australia's largest fund managers. So you could go to Magellan and they would invest your money in global stocks, predominantly infrastructure, these types of things. Magellan over the years, so it was started by Chris McKay and Hamish Douglas. Hamish ran the business for the predominant amount of time until recently, where he kind of took a few side steps and the market didn't like it. The investing performance went slightly down. He's exited, and the company has kind of been a little bit like, now that the new CEO has just left, it's kind of been a little bit rudderless. I think that's fair to say. Chris McKay stepped in for a little while. But while this has been happening, and why this is interesting, and it's much higher risk in my opinion than Resmed, but why this is interesting is it's been sold down so far, 80% or more in recent times. And the business, I think people are underestimating a little bit about the business, because I want to be very clear. I'm not the type of investor that always goes for these cheap stocks. Many of you know this. I tend to go for like 10, 20-year compounders, kind of like Resmed, to be honest. And you can see how aggressively it's been sold down. But the thing that I wanted to talk to you about is if I go into market index and I go to the annual report. Where are we? Where are we? Sorry, bear with me. I will get there. Here we go. So if we go to the annual report, most recent, let's go with this one. I thought I had it up, but obviously maybe not. Now, if we go to the statement of comprehensive income, if we go, sorry guys, I'm trying to be as quick as I can. If we go to, here we go. Okay, so this is a very simple calculation, but this gives you an indication of where you might be able to exploit some things that happen in the stock market. So here we can see we've got the income statement. We can see how much money they make. We can see how much they spend. We can see how extremely profitable Magellan is, like super profitable. Think about it. If you brought in $550 million of revenue and you made $380 million of profit, that is insane amounts of income. Like, that profit margin is incredible, which is why funds management businesses are wonderful. Now, if we drop down, we can see different things on the balance sheet. And I just want to make sure I've got the right. I was going by the wrong one. So here we go. I want to make sure I'm on the right annual report before I get this. Here we go. Okay. So now we can see the revenue. We can see the expenses. But if we go down to the statement of financial position, we can see something different. So on the balance sheet, we can see a few different things. One, we can see that at the end of the financial year, it had $370 million of cash in the bank. Wonderful. Heaps of cash. We can see it had some loans that were owing to it. And if we drop down to non-current assets, we can see there's $420 million of something here. And we can see $149 million of something here. So if we added up this, and this, you would be, what? We would probably be 700, 800. We'd be close to $1 billion of assets on the balance sheet. Now, there are some liabilities here as well, which we can see, but we should just explore what these things are. So if we go down to note number 7, financial assets, and we go to 8, let's quickly go to them. So in terms of financial assets, you can see that Magellan, the company has just invested into its own funds. So we can see that here. It's just invested into its own funds. For example, it's invested $167 million of its own money into its own funds. Now, if we go back up and we'll go to the next. Where am I? So now if we go to associates, which is 8, here we can see that it owns about 36% of Barrenjoey right here. So here we can see its value, implied value, is about 123 million. And we can see it owns FinClear, which is kind of like a back-end brokering platform. It's 25 million. So all in all, it looks like I could be wrong with my quick maths here, guys, but it looks like based on the financials that there may be between $800 million, so let's say for round figures, conservatively, $800 million of assets. So before we even consider the business and what the business does to generate profits, which is like it is cash flow positive, baby. This is a very cash flow positive business. Before we consider the business, it looks got $800 million of assets. Now we've got to figure out, okay, well, that's what's inside of it. How much is the thing actually worth? So here, just a quick little arithmetic on the Market Index website, we can see that the entire business, all of the shares inside the business that are like out there inside Selfwealth or brokerage are 1.3 billion. So as an analyst, the way I would look at this, and if I bring up, say, Canva to do it really quickly, let's just chuck this over here. I would say it has a $1.3 billion, that's the asking price, right? I would say it's got about 0.8 billion in assets, like genuine assets that are obviously there. So that would mean that roughly, even after we've taken out some of the liabilities, let's say it's a $800 million, a $500 million enterprise value. All right, that's very rough numbers. But basically what we're saying is you could buy all shares in the company right now if you just waved a magic wand for 1.3 billion. It's got a lot of assets inside it because it was a much bigger business. So that means the whole business is now worth, if you took all that stuff out, you netted them off, the whole business is probably worth 500 million, right? That's what we call enterprise value. So if it's got 500 million, then the question becomes, well, what would be left over after you take all this stuff out of it? The answer is very simple. You would be getting a business that's still, based on the last year's financials, makes $182 million of profit. $182 million. Now, let's say conservatively that falls. Let's say it falls to, I don't know, 100 million. So we're being really conservative. $100 million of profit, right? Effectively, you get the rest of the business for a price earnings ratio of 5. That's effectively what you're getting. So you're effectively getting a business for 5 times its profit if you netted off the assets and liabilities, right? Assuming that that was there. So this is the way I look at it. Now, that's me being conservative here, and we're assuming that the profit falls to $100 million from, was it 182 million? And the way a company would get that money out of itself is it would pay a big dividend. And that's what some of the activists are pushing for. So what happens when a company ends up in this type of situation? Activist investors or private equity funds will be circling and ready to take it over. And they would be looking to buy it outright, and they'd have to pay a little bit extra. So I think there's actually an opportunity here for a really good private equity fund to come along and maybe make an offer for Magellan if they haven't already behind the scenes. And so the risks to this business right now are effectively that its core business keeps falling. And we can see that in a recent preso. Here we go. Choose announcement type. We can see it. So I'll show you just 1 second, guys. I'll show you something. I'll just explain it rather than showing it to you. Okay. So inside of a business like Magellan, basically what happens is it only can make money based on the amount of money that it manages. So it charges a percentage fee based on what's left inside the business. So at the 31st of October, it had $34 billion. That's down from over $100 billion in not that long of a time. So currently, the market seems to think that the business will keep losing investors. So you, as an investor, are taking the risk. If you were to buy Magellan as an investor in its shares, you're basically taking the bet that it doesn't fall as far as people are expecting, and it can still make a profit for the foreseeable 5 years, effectively. I actually think I probably have a little bit of a different perspective to some people on this. I actually think that it's actually really interesting. I don't think Magellan's going to go bust. Maybe it does. But half of your, well, $800 billion of the downside is protected anyway, because that's not going anywhere. So what you're really taking a risk on is the last $500 million and the profit that it inevitably creates. So this is how I would pull apart a business like this, and I would go, well, that's really interesting. And some of those figures are very broad and probably wrong. But I just think it's a really interesting time to have Magellan on a watch list. Let's put this down at this point in time. Resmed is $22.93, sorry, and Magellan is $7.26. I'm going to put them down on my maybe list for now. So that's it. Martin, you said, what about Yancoal with an even better price earnings ratio? Or are institutions allergic to coal? Institutions are allergic to coal, Martin. That's the very simple answer. And that's why you get very low valuations. The difference is, I think that a business like Magellan, if they could get a great CEO, receive a takeover offer, and their investing performance continues to improve, it's got better recently. If their investing performance continues to improve, I think that there's a reason why this company could re-rate. So that's one thing. That's probably the one reason why it's different to Yancoal, to be honest. Is like, even in 3 years from now, Australian Super isn't going to want to buy Yancoal, Martin, because it's obviously for many reasons. But yes, so in effect, I think Resmed should go on the watch list because it is a super high quality business that's fallen over. It's stumbled. That doesn't happen very often. Magellan is not as high of a quality of a company, but it's very cheap and it's super profitable and it's got a lot of cash. So this is probably less my style of investing, but the type of thing that I would probably do in a very small part of my satellite. This is obviously general information only. I don't know your personal circumstances, and I should roll with the disclaimer down the bottom. I don't know your personal circumstances, but that's a business that would be on that list of special situations style investing in my portfolio. In fact, I might even do a write-up on the. I was thinking of doing a write-up on these on Friday for our members. So if you're inside the Rask core membership, you will get probably an analyst report on everything that I've covered tonight. I'm going to try and do it on Friday. And Resmed is just a business that I think I'd just be happy to take a bigger position and hold for a very long time. Okay, if you haven't already seen it, the Value Investor Program, you can get it for $200 off. Use the coupon code DEALS-200. If you like deals going into Christmas, get your partner to buy it for you and say, hey, this is my Christmas present. You just paid for it. Owen gave me a coupon code for $200 off. You can check that out on the Rask websites. The Value Investor Program looks like this. If I go back, it looks like this. Is an ugly mug there. I'll put that in the chat. There you go. And what is the final thing that I've got for you? Aha! So this is not a quote. Normally I end the week with a quote, but this week I did not want to do it. I've got the other one there from last week. But I wanted to read you a summary section of the Equity Mates book, Don't Stress, Just Invest. So just turn that off really quick. This is the book right here, Don't Stress, Just Invest. I think it's a fantastic introduction to investing. I think it's a wonderful book to buy for family and friends, especially if they're new to investing. There it is right there. Get it from basically everywhere. Good on the guys from Equity Mates for writing it. Okay, so this is one of the things that I drew my attention at the end of the book. So for those of you that don't know, Costco has wonderful hot dogs and they're very cheap. So they talk about inflation in this section of the book of Equity Mates. I'm going to zoom in a bit and I'll read it from you and hopefully the guys don't mind. So Costco's $1.50 hot dog. There is one exception to the law of inflation, Costco's hot dog. In 1985, in the United States, the retail giant introduced a new item to their food court, $1.50 for a hot dog and soda. Nearly 4 decades later, the price remains $1.50. To put that in context, here's how some other famous fast food items have changed in that time. In the 1980s, a Big Mac meal in the United States cost $2.59. It's now $5.99. A foot-long meatball sub from Subway in the United States costs $3.69. It's now $5.50. Isn't that pretty cheap? The Big Mac meal is up more than 130% and the sub sandwich 50%. Using data from the US Bureau of Labor Statistics, if the Costco hot dog had kept up with inflation, it would cost $3.65. But Costco has gone to extreme lengths to keep the price down. They've even switched from their hot dog supplier to building their own hot dog plant so they can keep the price down. And it is a popular item. The company reportedly sells 150 million hot dogs a year. Current Costco CEO Craig Jelinek has told the story of when he pitched raising the price of a hot dog to Costco founder Jim Senegal. I said, Jim, we can't sell this hot dog for $1.50. We are losing our rear ends. He said, if you raise the effing hot dog, I will kill you. Figure it out. As equity mates conclude, that's one way to resist the force of inflation. And I love that part of the book. I just absolutely love that part of the book, because for anyone that's been into a Costco restaurant, you will know that it is a wonderful treat at the end of spending way too much money than you thought you would to go and get a hot dog or a Coke. And I think that's one of the really interesting things. So thank you, everyone, for coming along tonight. If you haven't already, please take a moment. I would absolutely be delighted if you fill in the survey and help us make the live show even better. It's there in the chat if you need it. I can see a few people have already done it. Please, I'm going to send it out to the Rask community as well, but please, I will share the summaries and we'll make a grade of it, I'm sure, if we can build it together. So please take a couple of minutes and share, especially the regrets. If you have financial regrets, I have heaps. We all have regrets. It's what makes us human, apparently. So go and check that out. Next week, we'll be back at 12 p.m. midday with Drew Meredith from Waddle Partners. The following week, we're back with Mike Kemp. Don't forget, you can get the books from Major Street Publishing, 50% off. Rask Xmas, that's Rask Xmas. Buy some books for some family members or friends for Christmas and get them 50% off on Major Street. Sorry we went over time tonight, guys. I will be back next week, and I'll be back with Drew Meredith. It'll be a bit of fun. So I'll see you then. Bye for now. Thank you, Rob from Selfwealth. Get a Selfwealth account if you haven't already. And I will see you all next week. Stay fine. And what's the saying? Onwards and upwards. Bye for now.